Hey and welcome back to another video on my channel, and still I'll be talking on market structure, and today I'll be diving deeper both theoretically and with live chat examples. On the last video I discussed on basic market structure, and I'll do a little recap before I move to the advanced market structure. So on the last video I explained the three types of market structure, which consisted of the bullish, the bearish, and the consolidating market or ranging market, either of which you decide to use. And then I also talked on support and resistance levels, which someone insisted I explain better on it. So in this video, I'll try my best to make it as basic as possible so you guys can get clarity and understanding on market structure. Now, from the first video, the movement of the market was so basic, and if everyone traded that way, then everyone would be profitable, which is why you need to have the understanding of the internal and external structure of the market, which is way more logical and also consists of you following the most current trend of the market. Now, displayed on the screen, there are two different market structure scenarios. The theoretical is only used for beginners to understand the overall movement of the market and therefore know how to trade the market in different conditions, be it bullish, bearish, or ranging. But in reality, the market won't move that way, because just like I said, if it does move like that, then we would all be profitable within the shortest period of time. And now we will look at the theoretical structure as a higher time frame swing structure and the other as a real market scenario. And a swing structure is basically the movement of the market from a higher low to a higher high on an uptrend, and from a lower high to a lower low in a bearish market. So with this, you should all have the understanding that a swing high is the highest point that causes swing low, and a swing low is the lowest point that causes swing high. I really hope you're getting the hang of it, but if you don't, then just rewatch the video and you should be able to get clarity and better understanding on what I'm saying. So moving on, you should always have it in mind that after a break of structure, the market will have to retrace or pull back in order for the market to continue its move. And while pulling back, it obviously won't just create the whole pullback with just a single candle. There will have to be a sign that, yeah, the market is ready to pull back. You will have to, it has to give a particular structure depending on the strategy that you use, so that you know that the market is about to pull back. But in order for you to know that the market is about to pull back after a break of structure, you would have to wait for a change of character on your lower time frames. I don't know if that's the right way to say, but it doesn't really matter though, because as long as you're getting the understanding, the logic behind it, you should be able to have more clarity on it. As I said, you have to wait for the market to give a change of character on the lower time frame, and that is the first signal that the market is about to reverse, because now you know that demand is no longer in power, or is losing power rather, and supply is beginning to take over. And what do? You follow the current order flow of the market and also put in mind the overall structure of the market. So, because the market can't sell nor buy forever. So once suppliers start selling and price returns to a higher time frame demand, what do you do next? You wait for another change of character to confirm that sellers are now exhausted and buyers are ready to take over again. Because at some point I said the market was bullish, but then during the pullback, sellers took over. But then you should also have in mind the overall structure, meaning that based on the higher time frame scenario, the market is bullish, but then on the lower time frame, there was a pullback. So once it's done pulling back at a demand level, then it should be looking for a change of character to confirm that sellers are now exhausted and buyers are ready to take over again. And for you to know when order flow is about to switch, you first of all need to understand your strong and weak structure. And as I said on the first video of market structure, on an uptrend, your strong structure or strong leg at the higher lows. And the reason for it being strong is because it was able to break structure to the upside, and after the break, you should expect the pullback to that leg. And since the leg caused the break of structure, it should be respected. And if the leg should eventually get broken, then it should understand that buyers might be losing power, since the leg that failed to break structure to the upside. And that is when the idea of change of character comes in, which is a signal that the market is ready to pull back. And after the pullback is done and price starts buying again, you follow the order flow and so buy. But then, how do you know the market is ready to continue to buy? Well, you simply wait to see another change of character as a confirmation before buying again. And just to be sure that the market didn't just want to take liquidity and continue in its direction, you can wait for another break of structure. So basically, you'll be waiting for 2 breaks of structure, or you can also say a change of character and then a break of structure after that change of character to certify that the market is ready to continue the buy. So I said I was going to use the live chart example on this video, but I'm trying my best to make it as short as possible so you can understand each video easily. So on the next video, it will be just live chat example. So see you on the next video.